Now that we're familiar with the concept of financial statements and how to actually read them, there's one more important concept that we need to cover, and that's the difference between cash accounting and accrual accounting. Cash accounting allows you to record income and expenses whenever your money either enters your business or leaves your business. Accrual accounting, on the other hand, is a little bit more complex. Instead of focusing on when cash comes in and cash leaves, we instead focus on the actual business activity, i.e., when did we deliver our product or service, which will trigger income, and when did we consume the expense that we may have already paid for, which relates to an expense. The general idea is that smaller companies more often follow the cash basis of accounting because it's really easy to produce your financial statements under this process. The general idea is you just need a bank statement or credit card statement, and as you see each transaction come through, you'll classify it accordingly, with some exceptions, which we'll cover shortly. The accrual basis, on the other hand, needs a lot more information than what you can just find on your bank statement. Here, you need to study the details between each contract with your customer and understand whether you've delivered your product or service. And similarly, you need to also study the details around what the company purchased and when exactly they consumed that purchase. So let's go over a really quick example. Let's say you purchase a ticket to a conference in January and the conference doesn't start until April. Well, under the cash basis of an accounting, you'll record that expense in your operating expenses on your profit and loss in January, since that's when you actually paid for the conference ticket. Under the accrual basis, you're actually going to record what's known as a prepaid expense in January. This relates to an expense that you prepaid but haven't yet consumed. And this will be an asset that sits on your balance sheet, since it will provide future economic value when you later consume that expense by going to the conference. In April, you'll then book an adjusting journal entry to bring the value for that account from prepaid expenses into your income statement under conferences. Now, although some companies may opt for the cash basis of accounting, while others may opt for the accrual basis of accounting strictly out of preference, other companies don't really have a choice. First, generally, the bigger the company, the more likely they're going to follow the accrual basis of accounting. And this may be if they have outside investors who are a lot more interested in what is actually happening in terms of activity in the business rather than just cash movements. At the same time, generally accepted accounting principles require the use of accrual accounting. Now, if you're not familiar with what generally accepted accounting principles are, or GAAP, they're pretty much a rule set which dictate how exactly financial transactions can be recorded on your financial statements. There's also IFRS, or International Financial Reporting Standards. Both of these standards give a rule set for how exactly financial transactions are recorded on your financial statements. Now, aside from the fact that the cash basis usually records amounts received as income and amounts paid as expenses, there are some exceptions. For example, if you refund a customer, that wouldn't really be an expense under either the cash or accrual basis. That would be an offset to your sales, or a contra account, as we spoke about earlier, to your revenue. Similarly, if you purchase inventory or capital expenditures, those also wouldn't be expenses. Although you paid money for something, those would still go directly on your balance sheet. And lastly, if you receive, let's say, some debt or an investment from an investor, that also wouldn't be considered income. Instead, that would go under your liabilities for debt or your equity for the investment. So before you can read financial statements and understand what's happening in the business, you need to understand whether the company has elected to choose the cash basis of accounting or accrual basis of accounting. And now that we're familiar with the financial statements, how to read them, and the difference between cash versus accrual accounting, let's go over a few exercises to really solidify our understanding of how financial statements work.